Hello, welcome to my channel today. This is a King Shooter. It's the first time of joining us. Thank you for clicking on this video. Ensure you like, comment, share, and subscribe to this channel. Now, we want to talk on the introduction of accounting. Though we've started series of videos on it. Now, let's see the introduction. What is accounting? Okay, what is accounting? Now, accounting refers to the process. First thing you should know, accounting is a process. Okay, the process of recording, classifying, selecting, measuring the financial transactions of an organization to ensure users to make decision. The essence of accounting is to ensure that all the record processing is to ensure that the users of those information would make a good decision as regards to the recording. Okay, so accounting can be defined as the process of recording, classifying, summarizing, and communicating or interpreting the financial transaction of an organization to ensure that users makes decision on it. Okay, so that is what accounting basically. Okay, we also have what we call bookkeeping, because most time people misinterpret bookkeeping to mean accounting. No, bookkeeping is the systematic recording of business transaction on a daily basis. It just means the systematic recording of business transaction on a daily basis. Accounting goes further than bookkeeping. Okay, so bookkeeping is just the systematic recording of business transaction on daily basis. Okay, so we have different advantages of accounting, which I would not want to go into in this video. But I want to see the users of this information, the users of this information that is brought out by an accountant, the users of the information, okay? Because the essence of recording, classifying, summarizing, and interpreting this financial transaction is to ensure that users of this information will make informed decision, okay? So now one of the users of this information is the management. We have the management. We can have also the employees, also the owners, also the tax analysts, also the creditors. Also we have the bank. Also we have the government, and so on and so forth. Now, this individual makes use of the account information provided by an accountant in various ways. They make use of it. Okay, the management, the employees, the owners, the tax analysts, the creditors, the bank, and the government, and many other individuals. Okay, these are the users of accounting information. They make use of diverse aspects. For instance, the management will be interested in the profitability aspect to know if the business, as it were, is making profit or they are running at a loss. Okay, and other aspect of the ratios that concerns or that wrap up to become a financial statement. Okay, and also the employees will be interested if this company is also making profit, if they are a going concern company. Okay, so that their work can be assured. Okay, so these are some of the users of accounting information. Now, there's a limitation in accounting information. Limitation. Accounting has limitation. One, there's no recording as to the usefulness or the size of accounting information. Recording is just on monetary aspect. Recording is just on monetary aspect. Okay, that's one of the limitations. The recording as to the usefulness or the size or the quantity. Recording is just on monetary aspect. Another limitation of accounting information is that recording accounting information is historical in nature. That is, recording of any item is after the event. You don't record item before an event occurs. Okay, recording is after the event. So those are some of the limitations of what accounting. So we're just doing an introduction video of accounting. Okay, so I can start from afresh from types of accounts we have and all that. Now, there's what we call account equation. Accounting equation. Now, we already know equation is a statement that two opposite sides are equal. Equation is gotten from the word equal. Equal, meaning what you have at the left-hand side and what you have at the right-hand side are the same. Okay, so the accounting equation is just a summary of the totality of financial accounting. The totality of what accounting is embedded in the word accounting equation. Okay, now the accounting equation refers to or looks at this. Whenever I hear accounting equation, it is the asset is equal to the capital plus the liabilities. The assets equal the capital plus liability. This is the accounting equation. Now, what are they saying? Now, let me explain them in isolation. Now, what is asset or what are assets? Now, assets are items or properties of a company. What they have in a company is what's called what asset. Okay, these are items in what in a company that can last long for that company. Okay, they are properties of a company. For instance, example of assets can be the company's furniture and fittings. Okay, another one can be the plant and machinery. Another one can be a land and building. We can also have stock as its asset, and so on and so forth. These are properties of what? Of the firm. Okay. Now, what is capital? Now, capital is a money invested by the proprietor of that business in that business. The money invested in that business. Okay. We have capital also in economics. Capital in economics can be seen as wealth that are used in the production of what? More wealth. Okay, in accounting, it is what the money invested in that what by the proprietor in that business. Okay, so that is what the capital. Now, liabilities. Liabilities refers to what is owed by outsiders in that business. Okay, or the indebtedness of that business to outsider is known as what? Liability. The indebtedness of the business to what? Outsiders is known as what? The liabilities. Okay, as we proceed, we'll verge more on assets and what liabilities, because we have different type of liability. We have the long-term liability, also have the current liability, and also for assets we have what we call the fixed assets, and also we have the current asset. Okay, and we also have the intangible fixed asset and the tangible fixed asset. Okay, and we also have what we call the fictitious assets. Okay, as we verge more, we'll look on that. So ensure you have subscribed to this channel, because you'll be getting all this for free. Okay, so the asset is equal to the capital plus what? Liability. Now, in short, now we said this is the accounting equation. It means that whatever is in the company that serves as assets. Okay, we said asset are those items in the company that is what? Their property. Now, whatever is in the company is a combination of these two. One, it is either the proprietor brings in his own money as capital, or addition of the money or whatever is brought from outsider that serves as liability to the company. Okay, so the asset, what they have as a company in terms of all this, it is either it is brought by the proprietor, which is his capital, or it is brought from outside, which is their liability. So the assets equal capital plus what? Liability. This is what we call the accounting what? Equation. Okay, so that's where we'll stop for today. In the next video, we're going to check on the double entry principle, know what is double entry, and we advance from there. Okay, thank you for watching. Ensure you like, comment, please subscribe to this channel and share. Thank you for watching.